All right, good morning, trade pros. Welcome to our morning market update for Monday, October the 14th of 2019. This is George Papazov from Trade Pro Academy. First and foremost, I want to take a moment to say happy Thanksgiving to all of our Canadian friends. In Canada, we're celebrating Thanksgiving. That's why it's so quiet and desolate here today. Look, there's where Mark's supposed to be. Victoria, Azalea. Literally, there's no one. um, They have to be on vacation because it's illegal to have employees working during Thanksgiving Day. I think so. It is a statutory holiday. But when you run your own business, nothing's illegal. All right. So let's get started with today's update. I got a lot of stuff to cover. It is a little bit of a slower day because Canadian and U.S. banks are closed for the holiday. Canada's closed for Thanksgiving, and the United States is closed for Columbus Day. All U.S. banks are shut down. So you're going to see a little bit less volatility in the equity market. But I do think there will be some opportunity. Less volatility, but there will be opportunity in today's session for at least 1 to 2 good trades. They're not looking for 10. We know today is not going to be a 10 trade day, but we know 3 to 5 trades maximum is going to probably present themselves between oil and the U.S. equity market. All right, so what happened over the weekend and on Friday since we last talked? China and the United States shook hands on a phase one trade deal, as Donald Trump calls it. And what this points to is a temporary agreement where China will buy $40 to $50 billion additional a month of agricultural products. Also, some agreements, preliminary agreements on intellectual property and financial services as well, while the U.S. will suspend the tariffs that were supposed to be increased on October 15th. It's a deal, but it falls way short of what the market was expecting. Nonetheless, it was optimistic, and we priced in a rally last week. All right. Prices of soybeans, hogs, and cottons all rallied on the news. And prior to the announcement, China is the world's top consumer on all three of these things. All right, so everything's good, all's well. We have a phase one deal. Donald Trump sells it as a first of 3 deals. All right, they shook hands on the deal, but nothing's been signed. Check this out. China actually is asking for more talks by the end of October. And I don't think the market's picked up on this yet. All right, there's a lot of sources saying China is looking for more conversation between Premier Liu He and Donald Trump's top negotiators before President Xi agrees to signing this phase one deal. All right, so it's preliminary. Everything about this trade negotiation is preliminary and unsettled. All right, feels like we're walking on quicksand here. So Liu He will be sent to Washington some point throughout October to finalize this written deal, at which point President Xi and Donald Trump could sign it together next month in Chile at the APEC summit. All right. So while the news is of a deal, there hasn't been anything finalized. And I think last week was buy the rumor. I think this week becomes a sell the news week. So look out. Today will probably be a little bit slower because all banks are closed in North America pretty much, but it's going to pick up throughout the week. And we have a really busy economic week ahead of us on Wednesday. So stay tuned for that. All right. In addition to that, there's another real big data factor here that's supporting or that all traders are starting to look at and say, hey, how's this going to roll? It's the earnings season. All right. It's a huge gauge of economic strength. And a lot of investors coming through this earnings season are looking at what's the earnings quality, all right? What's revenue? What's the margin, the gross profit, et cetera. More importantly, though, what are they doing with dividends? Are they retaining earnings? Are they paying dividends out? How has this lowered interest rate helped corporations? How's the balance sheet looking? There's a lot of things that are going to be in scrutiny because we're getting to a late cycle boom of a bull market, early stage of a, I don't want to say it, word. All right. Here's the big companies starting out. For the big U.S. banks, the focus is going to be on costs. Like, are they cost cutting? Have costs increased? And also how they're faring in this new interest rate environment. Because the financial sector has a lot more sensitivity to interest rates than anything else. Lower interest rates provides lower NIMs or net interest margins for the banks, which translates to lower profit potentially. So in order to battle this lower profit, banks have to cut costs. I think that's what investors are going to be watching. I'll tell you this. When you're expecting cost cutting and you think cost cutting is going to save you, it cuts a little bit of fat, all right, around the belly. You get a little bit thinner, but it's not going to get you 1,000 dates. It's a temporary measure, and I think that in the long run, cost cutting is a really terrible thing for your business. You stifle innovation and growth, all right? So JP Morgan Chase get the ball rolling. JP Morgan gets the ball rolling tomorrow with their earnings report.